Hello, everyone. This is Martin, and first of all, wishing everyone here, all of you, regardless of where you came from originally, a very happy Canada Day weekend. Something really, truly gorgeous to celebrate here. What a great country we live in. The weather is fantastic, and the weekend's not over, so hopefully, all of you are enjoying everything along with your families. And we look forward to a great trading week. We're doing this presentation to cover the upcoming week from July the 4th to the 8th. Remember one thing, folks, the U.S., the United States, they're celebrating their Independence Day on July the 4th, which is Monday. So trading volume may be a bit lower on Monday, but there may still also be some volatility and some good trading opportunities, or just wait for Tuesday to roll along. So just keep that in mind. Monday is the U.S. Independence Day, July the 4th, and we are now going to start, as always, we're looking at the Euro USD weekly. Overall, I see we're trending a bit lower. We are still on a weekly. You can see we're still in basically in this sideways bullish channel. However, we broke below the channel and kind of stopped right here on the weekly chart at the 50 SMA. Price did go a lot lower after the Brexit vote, and then it's retraced a lot higher. So let's take a look at the daily chart, see what's going on. Okay, so here you can see much clearer view. Um, this also gives you a good indication. Look what's happened since March, the basically the end of March of 2016, a few months ago. Price has really been up, down, up, down, up, down within a huge sideways range. I don't know if you ever caught that. Also, a little bit earlier in the year, you can see we were also in a kind of a bullish channel, and we've now broken here on the daily. We've broken below with the Brexit vote last week. Price has been in a retracement 1, 2, 3, 4, 5 days, and I believe that after the Brexit vote, price is trending higher in a pullback. See, this is called a pullback. Here, price with the Brexit vote broke below support, actually went all the way down here and then ended up here, and then gapped down on the Monday trading right here. So we broke support, and as you know, previous support is now new resistance. So price is now pulled back all the way up to the resistance. We kind of had a doji here on a Thursday, Friday trading. We had an up day, so I kind of sense that this pair is going to go just a wee bit higher, and you may want to wait for evidence to the downside. However, my overall bias is to the downside. And what you want to do, what you can do, is wait for selling evidence to the downside or sell below the 110.90. 110.90 is right there. So sell below there. That's an aggressive sell. Or sell below 110.65. Right. Let me just take a look. 110.65. That's about right there. Okay. Sell there for price, I believe, could go much lower, and that is more of a conservative sell, okay? Or you just wait for price to go higher and then look for selling evidence, okay? And again, LEOD, you can see price has gone below, well below the bottom yellow line, is retraced up. Now we're just waiting and see. We don't have any trading opportunity on that. And you can see we're kind of stuck. This is the 4-hour chart, so price has just kind of gone sideways for the last couple of days. Okay, now we get to the British pound USD. Well, that was the big loser in the Brexit vote, obviously, because it concerns the UK. And I did mention look for price to eventually come back to this area right here. Let me just, okay, so this is the daily chart. See, on with the Brexit vote, price came all the way down, and kind of you can see it's retraced a bit. There's a bit of a pullback, but we're in a bit of a triangle sideways consolidation. I mean, I'm really thinking that price is either going to do one of two things. It's because we're in a triangle sideways, we want to wait for a break out to the upside, uh, like here going this way, so let me just draw that in. We want to wait for a break to the upside, or we want to wait for a break to the downside. Okay, the bias is to the downside, but it wouldn't surprise me if price actually bounced off the lower trend line. It might go a bit lower. It bounced. It wouldn't surprise me if price bounces higher, and maybe at some point even goes higher to come back to this area. This area is about a 38 to 50% retracement from the swing high here to the swing low with the movement of the Brexit vote. Okay, so you know, it's probably will not go up to here, but it may go a bit higher, bounce off the top trend line, and come back lower. So basically, you're waiting to see what happens. You're waiting for a breakout either above or below. And this might be a good counter trend. If price breaks above the 134.80 right here, then price has a bit of ways to go, and it'll go to at least this here, the close of this right here, but it may go higher and then come back down. So may be good for a counter trend trade, or just look for a breakout to the downside below the 30.80. So 130.80 would be down here. Look for a break to the downside. Okay. Now, again, same thing. You can see LEOD, no trade opportunity there at all. Australian USD. Now, this one's one of the better pairs to trade. Last week, the Australian dollar and New Zealand dollar showed its strength against the US currencies, and you can see prices trending higher. And I believe price is going to continue going higher. We have a lot of room for price to move. Take a look. Here's the close on Friday. Here's the previous swing high. How many pips is that, guys? Okay, let's take a look. 120 pips. So there's room for it to move up to at least here. There's the wick. If I take away this red triangle, you can see the actual upper wick of this black bearish candle is right there. So price could actually move from here all the way up to here, here, even higher to previous swing highs up here. So this is probably one of the better pairs to take a look at. You may want to wait for a slight pullback first and then just take a buy trade, or you may want to take a buy trade right now, which is still aggressive, but it's a pretty good idea. If you wait for price to go back just a wee bit to about this area, you'll get a better stop loss. Your loss will be closer to your entry, giving you a better risk to reward. Okay, so less risk, more reward potential. And there's that you can do. There's room for this pair to go higher to approximately the 76.10 to 76.50 area. Now, I want to switch to the Australian USD. Here's the LEOD chart. You can see clearly with the Friday's movement, we closed above the upper yellow line. Okay, so what does that mean? Well, you can take a trade right now, but remember your stop loss has to go back below the bottom yellow line. So if you want to wait, um, if you want to wait for price to pull back a little bit, that's okay too. Or if you do take a trade right now, your stop loss could be at least below. See this white candle right here, this white bullish candle, and this is the 50 moving average, right? Um, so your stop loss could be right about there, okay, which is about the 73.79. Um, I- Here, you know what? I believe price is going to go higher, but what bothers me a bit is this 50. Oh, I'm sorry. Yeah, that's the 50. I put that in on the LEOD chart. The 50 is angling down. Price is going higher, so price may actually come back down first a bit and then go higher, or may just take off on Monday. Okay. The New Zealand USD is the exact same thing. Here's the weekly. You can see we're basically a lot of weekly bullish candles. Look, one, two, three, four. I believe price is going to go higher. Let's switch to the daily. Okay, you can see I've drawn in this upper channel here. It's a bullish channel. You can take a buy trade right now, and again, just like the last pair, there's a lot of room to the upside for short-term trading. there's at least 76 to 100 pips to the upside. And if it breaks this previous swing high, it can obviously go a lot higher toward the top end of this trend line. You can see that right there, right? Okay, so price may also come back down a bit, and for the conservative traders, you may want to wait, see if price comes back down, then look for buying evidence. But this is similar to the Australian dollar. I see room to the upside. My bias is to the upside. And let's take a look at the LEOD. And this is always a good idea to compare the LEOD charts with price action charts. And you can see this phenomenal entry 1, 2, 3 days ago last week. So here's the Brexit vote, Monday trading, Tuesday, Wednesday. Wednesday with this white bullish bar. It broke above the yellow line here. And let me just take a look here. I'm going to put my crosshair here, and let's take a look. It did not quite get above the yellow here on the, you know, on the RSI right here. However, again, sometimes you want to be a little bit more aggressive. The MACD histobars were well above the zero. So if you would have gotten in right here at the open of this next candle, you would have already been in profit by quite a bit, at least 75 pips. Now, look at this next candle here, though. Okay, here we had a huge bullish move up. And remember what I say, sometimes when you have a huge bullish move up or down, bearish move down, you always wait for a bit of a retracement. And this is exactly what I'm talking about. In this case, the next day, price actually opened up right there and went down all the way there to more than the 50% of the previous candle's overall range. The overall range was from here, here's the open, here's the high of the day, here's the close. So 50% is here, and this wick, this bottom wick on the next day went all the way below the 50% of the this overall range. Imagine getting in here, having a stop loss just below the yellow would have been a phenomenal trade opportunity. Okay, now we get to the US CAD. This one's a little bit different. Um, the couple of the other major pairs, with the U.S. being the quote currency, they look like they're rising higher. However, with the U.S. as the first the first pair, I mean the first currency in this pair, the US CAD, it looks like it may be going a bit lower, and there's a lot of interesting dynamics here. One, you can see we're in an overall triangle, which means price is coming down, maybe down further. We're consolidating with the triangle again. With the triangle, we want to wait for further confirmation, either a breakout to the upside or break to the downside. That's what we're looking for here, okay? And you can see all last week we pulled back, pulled back. So 1, 2, 3, 4 days pulling back. We may go down further to retest the 50. Price may indeed bounce off the 50, so price may come down and then bounce off the 50 and then go higher, okay? Or it may break below the 50 and come back to retest the previous trend line right here that I've drawn in for you. So with this pair, because we're in a triangle consolidation, the idea is to wait for a breakout either to the upside or to the downside. So you want for prices right here to either move, first of all, higher toward this area or move lower toward this area, okay, with the trend line I've drawn in, and then wait for further evidence. So does price, in other words, does price move down and then bounce higher? Does price go up and bounce down? Again, because we're in this triangle consolidation, I mean, you can play those moves if you are a little bit more of an experienced trader, or just wait for a breakout to the upside, to the downside. And if you're looking for a break, you can wait for a sell with a close below 127.80. So again, close below 127.80. Okay, I'm just taking a look at my notes. Yeah, 127.80, which is right there. Okay. And I'm gonna change that because I think that's wrong in my 127.80. Yeah, okay, 127.80. Yeah, no, that's fine. And the other way is if you're looking for a breakout to the upside, buy above the 130.20, which would be right about there. One to the upside 130. Yeah, right there. It's a bit of an aggressive buy. So if you take a buy trade above 130 20, it's aggressive, but then price may go up to about here and then even higher, right? If it's going to go to the upside, or just wait for a breakout of the triangle up or down. So it's really up to you. And now we get to, again, you can see on the LEOD where price is just in the middle. So you want to wait to a break to the downside or to the upside. Let me just draw. There you go. So if price breaks to the downside, remember we've got the previous swing low. So that's the amount of room you've got for price to move. So keep that in consideration that this would be your support area. Okay. And now we get to the US Swiss franc. Now, here's the same thing. This is the daily chart. I've zoomed it out just a wee bit. And you can see again, same as the previous currency pair, the US CAD, we're in a huge up, down, up, down, up within this triangle. Triangle is shown by the upper trend line, lower trend line. So again, price here is on the daily, it is above. Well, it's kind of, let me just zoom that in. Is it above? It's just kind of right at sitting at the 50 SMA. So not really that clear. On the weekly, price is definitely below the 50. That means we're looking for sell trades on the daily. We're right at 50. So if we're looking for a sell trade, then what you want to do is you want to take a sell trade below the 50, and you could sell with a close below 96.90, which is right around there. Okay, so if price comes down, close below 96.90, then you could take a sell trade. Price most likely will come down to retest the previous swing low here. Okay. And my bias is to the downside, by the way, for this pair. The US CAD is not as clear. US CAD, going back to that again, just really quickly, may just come back down to the 50. Again, take a look. This is the daily chart. Price is above the 50. On the weekly chart, price is below the 50. So there's a bit of a conflicting story there. Again, this is more of a wait and see situation. I'd wait more to see more evidence if it bounces off the 50 and goes higher. But with the U.S. Swiss franc, my bias is to the downside because both basically the price is just barely below the 50 here. So I'm kind of thinking that price may continue going down lower. Okay, and our final pair is the U.S. Japanese yen. Now you can see here. Here's the daily chart. We have broken a down bearish channel. You can see price went down, up, and then it's broken below this lower trend line. And after the Brexit vote, and then again the last four days, excluding Friday. Here's the Sunday, Monday trading, Tuesday, Wednesday, Thursday. We had 4 up days, basically retesting previous support, which is now new resistance, right? Okay, so once price breaks support and comes back up to retest that area, in this case drawn by the trend line, then that is now resistance. But take a look at something else, guys, really closely. Friday, what kind of candle is this? Do you see? This is a bearish engulfing candle. It engulfs the previous day's candle, and my bias is to the downside for sure. You can either take a sell trade right now. That if that's too aggressive for you, then wait for a slight pullback. Wait for a slight pullback first, and look for a sell opportunity, or take a sell limit order, or sell below 101.50. Now, this is the most conservative idea, but let me take the crosshair too. tool. There's the 101.50 right there. If you take a sell stop order below 101.50, price most likely once it gets past this area, it's going to keep going down, and there's a lot of room to the downside for this. So this is what I see for that. Other good pairs that you can look for trading are oil. Oil on Friday had an up day, and it's going a bit sideways, but again, it may break up to the upside again. And if that happens, it's going to give some strength to the Canadian dollar and weakness to the US dollar for that pair being the US CAD. And so you can look at oil. Gold and silver seem to be doing really, really well. So, obviously, with the problem with the Brexit vote and everything else, when there's uncertainty in the markets, then people will tend to put their money in the gold and silver. So, you can take a look at those two opportunities to trade. They are on your ThinkForex platform. Okay, so just take a look at that. The strong currencies are Australian and New Zealand dollar. The weak currencies are the British pound and US. And with that said, the cross pairs to watch, you can look at selling opportunities in the British pound Australian dollar and the British pound New Zealand dollars with your proper entry criteria. That's important. Never take my word just as it is. Always, depends on what your trading entry criteria is. Maybe different from one person may entry criteria may be different from another person. So, with that said, that's our trading wrap up for this upcoming week, July 4th to the 8th. Happy trading, guys. Hey, we had a terrific first meeting. I cannot believe the turnout was fantastic. We had quite a number of people that have turned out. Our next monthly meeting is actually July the 25th. So if you're interested, email me. Email me first and let me know that you're interested. I will present you with more details on the monthly meeting. It's held at the Central Library here in the Mississauga area. Okay, so happy trading this week, guys. Take care. All the best.